Hey everyone, it's Justin Spittler, aka JSpit Trades. I want to welcome you back to the channel. In this video, we're going to do something a little different. So I have my boy Jay with me on this video today. This is Jay the Disruptor, if you follow him on Twitter. And in this video, we're just going to look through some charts. So I'll start things off by sharing some charts that have my attention. Then Jay will share a few charts that he's watching right now. And then we're going to wrap things up at the end of this. I have a few picks that I like, some stock setups that I like headed into the new week. So Jay, want to say hi to everyone? Since it's your first time here.
Glad to be here, Justin. Thanks for having me, man. Excited and looking forward to it. Let's look at some charts.
Cool. All right. Well, let's just dig right into it. First thing we're going to look at is we're just going to start things off by looking at the S&P 500. So I don't have a ton to say about the S&P 500. Other than that, we had a really strong week this past week. So we ended the week up about 2.4%. Kind of had a little bit of a pullback today, but overall, very strong week. We really consolidated and more or less traded sideways. We were grinding a little higher through the past 4 weeks, but we finally broke out of that sideways consolidation this past week, and we're able to close this week at the highest level since I think April of last year. So overall, really constructive action. Not a ton to say at the index level. What do you got, Jay? What did you?
You've identified this nice inverted head and shoulder as it breaks the downtrend, and from there it just keeps inching up. Who wouldn't want to be a part of that? It's a good chart.
Yeah. So yeah, that's the S&P 500. It's a pretty similar story when we look at the Qs, although the Qs have been a little bit stronger just because of their heavy weight and exposure to technology. But you can see here the Qs, after breaking out of that multi-month base, have just really been on an absolute tear after flipping that former resistance into support. And similar to what we saw in the SPY, we kind of had that huge initial run up, and we traded sideways for a little bit, allowed the 10-week moving average to play catch up. And then we saw what happened this week. We're breaking out to new highs. So yeah, just overall really constructive action in the Qs. You got anything to add on this one?
No, I'm a degenerate, so I'm in TQQQ, the 3X. It's just rocketing. It's been a great ride. Love the trade. I just love it.
Must love this. So I think a big story though that happened this week is so after having this huge rally, this is the Fang Plus Index. So this is really your mega cap tech stocks. It's also got Tesla and Apple. I don't know if most people consider them tech or consumer discretionary, but nonetheless, these are the biggest, most important stocks in the market. And you can see they had this huge run up. They tried to break out to all-time highs a few weeks ago, got rejected, but the pullback was really shallow. Dip buyers really came in, and I think there was a lot of people sidelined who wanted exposure to these stocks. And this afternoon, this week, we were able to close at new all-time highs. So overall, really constructive action. It's hard to be bearish in the market when you have the biggest, most important stocks doing this.
Yeah, Justin, I tweeted out maybe just 2 days ago that my gut was telling me Fang was going to jump up higher. I'm in a microsectors FNGO, another 3X ETF for Fang, and sure enough, it did it the next day. I had no idea my timing would be that good, but God, what a play. And just my account just rocketed because of it. Just such a solid thing to be trading right now.
Yeah, it just, even if you don't have direct exposure to these names, if you're more of a small cap, mid cap individual stock buyer, this is just an overall very healthy sign for the market. So definitely encouraging. With the strong performance of the mega cap tech stocks, we had a breakout in XLK. So I think it was last week that XLI, the industrials, broke out to all-time highs, and which kind of debunked this popular narrative that we have in the market right now, which is that it's been all tech. That's what's been driving and propping up the market. But it was actually the industrials that were able to break out to new all-time highs first. But this week we had XLK closing at its highest weekly close ever. So again, very constructive. This is the biggest, most important sector in both the S&P 500 and the NASDAQ 100. So again, hard to get too bearish when you're seeing this.
Yeah.
So
great chart.
And then, but something that's a bit of, I guess, a newer development in the market that has a lot of people excited is that small caps are starting to participate. which again is a bit of a myth buster. You have all these people saying, oh, it's just the mega caps stocks, it's just the large caps. Well, now you have 2,000 small cap stocks that are starting to participate due to IWM. So IWM was really just trading sideways in this consolidation range, but we were able to break this downtrend that it had been in since late 2021. So overall, just, yeah, another very encouraging sign in the market right now.
You know, Justin, I cut my teeth trading penny stocks and trading the OTC, the over-the-counter stuff back during COVID. You know, IWM was such a great compass. And I was really excited to see this week that it actually broke out relative to the Dow, DIA, the Dow Industrial Average. To me, when that kind of stuff happens, when these guys are overpowering the 30 big boring stocks, things get exciting and it's time to start yo-yoing, you know? I mean, it's just,
absolutely. I know your strategy is a little different, where you trade a lot of 3x leveraged ETFs, but you got to admit that this is a great time to be a stock picker, because now we're starting to see a lot more stocks participate. So if you were in names that, you know, may have been lagging relative to the mega cap tech leaders, I think now a lot of those stocks are going to have their time to shine. So yeah, overall, another bullish indicator. So kind of switching gears a little bit, I want to look at a thematic ETF right now. This has been the hottest thematic theme of the year, which has been AI stocks. Also, robotic stocks have done quite well lately. But just the AI theme, which was really, you know, riding the hype of, you know, everything NVIDIA's had to say about artificial intelligence. So this has been a very strong area of the market. And a few weeks ago, I did a video and it had commented on Twitter how I thought we could see a pullback in these AI stocks, because they were, you know, had been flying high. They were a little extended, but when you look at the BOTZ ETF here, you can see exactly what happened. So we had this big run up. We got a little extended relative to that rising 10-week, but then we had a pullback and we came back and kissed that rising 10-week. And then this past week, we closed up about 4.3%. And this, to me, looks like it's starting to set up again. And I don't know if it'll, you know, get launch, you know, early next week, but it does look like it's setting up again. It's not a move that I would look to fade. I certainly wouldn't want to be short these stocks heading into the coming weeks. But AI stocks look like they could, you know, pick up a lot of momentum here soon. What do you think?
And this is one that I particularly hold. Like, this is in my portfolio, BOTZ, and you know, I bought it on the breakout. I mean, it's just been paying off really well. It's a great trade. You know, it caught that AI hysteria, and we'll just see if that continues, you know. But yeah, definitely there was a bit of a pullback. I consolidated for a few weeks, but the patient ones, like myself, we said, hey, you know, this is going to move higher. It takes a lot of energy to do a reversal on these things once the reversal's already in, which we see at that bottom there. And I just think this thing just continues higher. It might have a little of a pause, but I mean, I can pause. You know, I'm fine. This thing's going to keep moving.
Yeah, and I think the price action in BOTZ, and you can see it in a lot of other areas of the market. But I think what's interesting when you look at BOTZ is what it reflects to me is that there was a lot of people who were sidelined, who missed out on the initial rally. And so that's why the dips on a lot of these leading stocks have been so shallow. I think when a lot of these leading stocks have pulled back, there's just been, you know, an army of people who are wanted to get exposure to these stocks, who are gobbling these stocks up on the first dip. So the dips are just not that deep. They haven't been that, they've been relatively shallow. So I think that's just, you know, further evidence that we're in a very strong market right now.
That's some solid analysis right there. The behavioral aspect of this, I hadn't considered it. That's really sharp, Justin. I like that a lot.
Cool. Appreciate it. Another thematic ETF that I want to look at, and this is something that I tweeted out this week, and it's an area of the market that I've just had a special attention towards, and that's these gambling stocks. So I think the largest holding in this BETZ ETF is DraftKings. I also noticed that Flutter Entertainment, which owns FanDuel, is in this ETF, and so it's a good way to get exposure to these gambling stocks, which I think we could have some seasonality as we're heading into football season. We're not too far away from NFL, college football, which is a big time for sports betting. And so we're starting to see bets break out right now, and that's been really driven by strong performances like Flutter Entertainment. I think was up like about 11% this week, and DraftKings also had a really good week. So this is a thematic area of the market that I'm definitely keeping a close eye on. You can see that it was one of the hottest areas of the market back in 2020 in that post COVID rally that we had. Then after topping out, it had a huge retracement, basically retraced that entire move, but then it's put in a bottoming structure and is just starting to wake up. So I think this could have legs. These gambling stocks could be definitely an area of the market that could really start playing some catch up in the weeks and months ahead. So now we're going to switch gears, and I'm going to pass over to Jay, and he's going to share a few of his charts. So the first one he's going to look at is the dollar. You want to take the reins?
Yeah, just this thing I was calling the top way back when, and it just plummeted, and then it had this thing where it just had to kind of work its way through this descending triangle, and then just broke down. We've been that red box up at the top, that's your RSI bear range. This thing's just it's just not doing well. It doesn't have the strength, and the next two charts are kind of going to tell you why that matters. So yeah, we can go ahead and look at that next one, Justin. So this right here, this is you got to love the inverse correlation on this. And the top pane, you've got, well, top pane is the RSI, but then you got US dollar index. Now below that is an ETF called ACWI. It's all country world index, and you can just see how these are working so in tandem when you have the dollar index breaking down, and at the exact same week you have all country world index breaking out. What that means is, as the dollar weakens, the rest of the world can actually start getting some juice. That becomes really exciting when you start thinking about trade opportunities, and we'll jump into that in the next slide when you start talking about the way these commodities in different countries work together. So Justin, yeah, if you wouldn't mind going to that next one, that'd be awesome.
Yeah, but before, I just wanted to give you your flowers for finding this correlation, because I had separately shared charts of the US dollar index and then the all world index, but I hadn't put it together like you had. So that's good eye for catching that. It definitely makes a ton of sense. But I've been sharing that all world index and just pointing out that it's starting to break out, and it's for the people that have been saying it's just 5 stocks, it's just 7 stocks. Right. Well, no, it's not. It's the entire world stock market's breaking out. So that really, should shut those people up. But they'll find something to complain about. So this is your correlations chart.
Yeah, so for me, in my mind, if I were a risk taker and I wanted to say, okay, what is going to work or what should work in this environment? Now, that's not the way I would approach this, but I definitely think there are a lot of traders out there who would like to know this kind of information. So in the top box, what I've got is US copper, which is CPER. I've got China, MCHI, and then the S&P. And what historically happens is that these three move in tandem. And you can see that isn't really the case. It's kind of getting there, but it's just not there yet. So SPY broke out, and all three of those in the box, they work inversely to the US dollar, just like that ACWI that we just shared. So if I was thinking that ACWI is breaking out and SPY is already broken out, at that point, I might start looking at placing my China bets, especially as we see China curling back above what has acted as support and resistance. Or I might be thinking more in the commodity spaces, and copper is one of those commodities that's kind of a, hey, we're getting bullish here. So I would be looking at copper thinking copper might make a run here. It's certainly been working its way up to that recent support, which turned into resistance. If it breaks through, this could be a big game changer.
Yeah. Gun to your head, which one do you think participates next? Would you think copper or China starts to follow the S&P 500?
So if you're willing to zoom out and you look at China, it almost looks like a symmetrical triangle. If you want to jump back into like Edwards and McGee and the whole pattern drawing stuff and technical analysis, it's just coming to a point, and when it gets to a point, it tends to break out. The problem is it's not a high probability bet on which direction it breaks. Meanwhile, you have copper, again, back to the Edwards and McGee, and you've got what would be called an ascending triangle where it's curving up to a level of resistance. And the probability on that is more to the upside. So for me, I'd say copper. And I'd say if copper breaks, then I'm definitely going to get into China as well.
Gotcha. Interesting. I'll have to take a closer look at those charts. Next up, we got some consumer discretionary stocks. You want to talk about those for a second?
This goes back to the point that you made, and it's just that everyone's saying that it's amazing the span of time is so brief where people are saying, oh, it's only 5 stocks breaking out, until literally you could overhear people say everything's already broken out, you're too late to the trade, and that was like in a matter of weeks. And that sort of thing just wasn't really constructive. It wasn't really what was happening. And you can see it clearly here when you start seeing that everything that is considered consumer discretionary is only now breaking out. A chart that we don't have here, Justin, is retail. And I shared that with you recently, saying retail just broke out. For me, when you've got equal weight consumer discretionary and retail both breaking out along with the entire world, there's a whole lot of plays to get excited about.
Yeah, but what about the narrative that the consumer's dead? These charts are not confirming that. So I guess that's another perma-bear myth that we're debunking today. But yeah, I mean, it's hard to argue with this price action. I haven't shared this chart too much on my feed, but I have been sharing XLY and just showing the strength we've been seeing out of that area of the market, because I was hearing all these. We all heard the narratives and the rumors that the consumer's dead, that a recession's around the corner, but you're just not seeing it in stock prices, which are forward-looking. So, yeah, I just think it's very interesting, and it's why we pay such close attention to price.
Yeah.
So, you want to say a few things about ARK next?
Yeah, it's like, and just to kind of go back to that whole idea of like things that were just dogs like ARK, Kathy Wood, she gets a lot of shade, it's breaking out, man. And it's not just ARK, it's ARK FinTech, it's ARK Internet. These things are all moving up, they're all moving higher. Basically, this pattern that you see in a lot of these charts is what is called a 1, 2, 3 reversal pattern. Basically, one is it breaks the downtrend, which is that diagonal line, it finds support, or AKA a higher low, and then it breaks above a previous high. And you're just seeing it over and over and over in all of these charts, and it's exciting stuff because, it's like now it's time to play Kathy's game. And what game is that? Well, she wants big returns. If this produces that, then it could be a really nice trade for a lot of people.
Yeah, to that point, some software stocks that I was watching this past week, their names I've tweeted about before, actually traded a little Toast this week. So Toast had a stage 1 breakout. That was pretty powerful. I just clipped it. I made like 10 or 11% on it in a few days. So I just took a quick gain on it. But that's a name that I think could definitely warm up. And the other name that was, had a similar stage 1 breakout was Procore, which is a software. They specialize in construction software, and they had a very powerful stage 1 breakout this week. And a few other names within the software space that I think, could put in some similar moves to what we might see with ARK would be Cloudflare, Snowflake, and then Unity. Unity is a AI play that a lot of people are excited about. So those would be 3 names that I'm watching in the coming weeks. I think those names could have a potentially explosive stage 1 breakouts pretty soon here. So definitely some names to watch. Can't remember what's next. Can't remember.
I was just going to add that I think you could also just say small cap and mid cap growth in general could really be a nice place to be looking based on what you were just talking about. I completely agree, Justin.
Yeah, speaking of small caps, this lithium chart looks a heck of a lot like that IWM chart we looked at earlier.
Yeah, absolutely. And so it's again, it's a 1, 2, 3 reversal pattern. RSI up in the top pane. It is not broken 60 yet. 60 is the magical number for me on weekly RSI. If I break that, I know I'm in a bullish range. It's a trade I really want to be in, but I have registered my higher low. I've broken above the previous high, which is just right there, right before it breaks out. To me, this is good. It plays off the Tesla sympathy, but also you got Rivian, you have a Plug, you have all those other names that are kind of clustered together in that EV trade, lithium battery tech. It's not, this ETF should not be looked at as like a lithium trade. It's not a hard commodity trade. Rather, it's a commodity it's a trade in that space, and it just looks good. I think if Kathy's going to break out, I think EVs are breaking out. Robotic cars are breaking out. I mean, it's just, this is an obvious one, you know.
Yeah, definitely a nice area to look at for potential new longs. This one looks like it's just starting to get warmed up. So definitely something I've been watching too. So we're gonna wrap things up. So that was those Jay's charts. I thought those were awesome. I thought your commentary on them was superb. So thanks for doing that. But we're just gonna wrap things up really quickly. I'm just gonna share a few charts that I'm liking as we head into the new week. So these are some names that I was watching. I actually took a little bit of exposure in Nova today. So this is a semiconductor stock. I've shared this stock before in both prior YouTube videos and on Twitter. And the thing I like about it is that it had this, big basing pattern, and then it broke out. So it broke through that resistance. And then the past really 4 or 5 weeks, it's just been trading above that level and essentially flipping that resistance into support. And now this past week, that rising 10-week moving average has caught up to it, and it dipped below it, but was able to, buyers stepped in, so it was able to open the week above it and obviously close the week above it. We ended the week up about 3.8%. But I really like how this one's shaping up. And if you were to drill it down and zoom in on this one's daily, you can see that it's also starting to look really good. It actually showed some really impressive relative strength today. A lot of the growth stocks that were on my watch list were down 3 or 4% or even more than that. And this one, I think, closed the day up about 1.5 or 1.6%. So I just like the relative strength that I was seeing from this name. And, there's not, at this point, there's not a heck of a lot standing in this one's way between where it is right now and those former all-time highs around, just under 150. And we're at 116 right now. So pretty good upside there. Pretty similar situation with Onto, another semiconductor company. Basically the same story. Had this huge multi-month base that it broke out of, was able to break out of that level and then flip that former resistance, that former all-time highs into support. And similar to what we saw with Nova, that 10-week moving average is catching up to it, and it showed some pretty good relative strength today. I can't remember exactly how it closed the day, but I was watching it, and it was basically right around really close to closing green, while a lot of stocks on my watch list were getting hammered pretty hard. So I think this one's setting up to potentially be a good trade early next week. VTEX, this is a under the radar software company that came on my attention recently, and I just really like how this one's setting up. It hasn't really done a heck of a lot yet, but you can see that it bottomed last summer. So I like stocks that bottomed well ahead of the indexes. I like to say that they're ahead of schedule. So it's bottoming process is pretty mature, but it hasn't made a huge move yet. But you can see, really since May, it's been really, really strong. There's been huge volume pouring into it, and it actually closed this past week. It looks like at the highest level since last June. So potentially new 52-week highs, and really like the volume profile. So this one's looking, potentially explosive. And one thing I do like about this stock is I don't see too many other people talking about it. I tend to have the best luck with, names that have just not as many eyeballs on them. So this is definitely a name that I'm watching as we head into the new week. And then
wait, Justin, I got to add, and can we talk about that price, man? I mean, this thing's so cheap. I mean, I don't know. To me, it's like this is the trade of the trades that I've seen. This is the one that looks like something I'm going to put on my own watch list. I just love it, man. This is a great find. Thanks for bringing this.
Yeah, no, it's at $5 now, and it's former all-time highs back in 2021. Look like they're about $1 or $32. So it's well off those, but it's starting to wake up in a serious way. So definitely a very interesting name to watch. Not a name that a lot of people are talking about. I think its market cap's a shade under $1 billion still. So
nice.
Definitely under the radar. This one is not so under the radar. This is a very popular stock right now. This is Celsius. They're the energy drink company. I've never had them. I know people rave about them and say that it's getting them off coffee, but I've never tried them. Have you ever tried their products?
No, I haven't.
Yeah, so I know some people on my feed are really into the products, but I just really like how this chart is setting up here. So this is an early leader, one of the first stocks to really get moving. But just the past few weeks, basically since the beginning of June, it's been consolidating while kind of grinding higher. So you can make an argument that we got a little vertical accumulation going on, which is just a real sign of strength. And that 10-week moving average is come up, and it's starting to act as support. And yeah, I just really like how this name's setting up. I like the volume profile. We have a couple of huge buying volume bars in there, which to me is indicative of institutions getting involved with this stock. And the
Absolutely.
RSI's cooled off a lot. I know fundamentally, I think the stock has really exceptional earnings and sales growth. So potential big
Nice.
winner. And I also think it has like a 30% short interest. So kind of a lot to like about this one. The major knock for me is that there's just a lot of eyeballs on it. It's a very popular stock right now, but it
I'd
looks
love
great
to.
to me.
I'd love to ask you a question, Justin, and anyone that's watching, like if they were to share their opinions in the comments, that'd be amazing. But a lot of people when they see that RSI divergence, and this is a great example of one where price is moving up but RSI is moving down. A lot of people say, "Oh, it's overbought. It's time to get out." Um, but if you notice in the charts I shared earlier, the way I look at RSI is if 40 acts as support, anything above that is bullish. It might have a pullback, but that doesn't mean I'd want to exit a trade. So for me, this is clearly in a bullish range. There is some RSI divergence in the price. In your opinion, is that something is that a back off signal, or is that a signal like this is going to take a breather and then rocket higher?
I mean, I think this name could be potentially setting up to move soon. I think
Mm,
it has. I mean, the RSI on it has come down from about the shade under 90. That looks like
right.
maybe 88, back down, and looks like it got to the low 60s. Is at
Yeah.
63.5 right now. So it's strong. It's still high, but to me, what I've seen in the RSI is just this is a really strong stock that
Yeah.
people really want to own. And yeah, I just think it's I don't know. I'm just really impressed with the strength and how little it's given back. Often people want to position themselves in the best, most powerful stocks, but those stocks are often can be really hard to get involved in. So a lot of people will be like, "Oh, I'll wait till it has a really sharp pullback," but sometimes that just never comes. And in this case, it looks like Celsius has cooled off just by consolidating, just
Yeah.
by
Yeah.
essentially trading sideways. And to me, that's a sign of strength. So this looks like one of the just stronger stocks in the overall market. So yeah, I bought a little bit today. I didn't get in huge, but I want to see how it reacts. But I feel like you could measure a risk on this one pretty easily. Maybe put a stop loss like slightly below that rising 10-week, depending on your
Yeah.
strategy. But I would probably give it a little bit more wiggle room because there's just so many eyeballs on it. Those sorts of stocks can have shakeouts and fake outs and that sort of thing. So just something to be mindful of. But yeah, anything else you want to add? We only got about a minute left. So final
No, I
thoughts.
love it. I love it. Great charts today, Justin. Thanks so much for sharing these, man.
All right, cool. Well, yeah, thanks for joining me today. We'll have to do it again sometime.
Absolutely.
All
Love
right.
that.